So what day is it? Today is the 3rd, March 3rd, 2015. It's a Tuesday in the United States of America, 7:30 in the morning New York time, London lunch. Right now it says these events are available Monday, Thursday, starting at 7:30 a.m. New York time. How would you guys like to do this event every Friday? Same price, free. I know, eh? Hey, don't negotiate. Jimmy says yes. Kako says yes. YJ, yes. Ron, yes. Greg, 1, yes. DeBeast, yes. Mariana, yes. Greg, other Greg, yes. Amanda, awesome. Nuno says yes. C says Nuno. And Saturday, yeah. Sorry, I gotta make sure my kids know my name, right? By the way, my name is Wayne McDonald. Guess what? I will be doing these events every Friday, 7:30 at fxstreet.com. Same time, different place, same gig. And I was talking with FX Street. I've done non-farm payrolls live. I think it's like 107 months in a row now. I don't know how many years that is. What is it, 6, 7, 8 years? I don't even know. And I've been doing stuff at FX Street for probably a year longer than that. So I don't know how long I've been at FX Street, 10 years, 9 years, I don't know. So long story short, I said, hey, I like doing these events at FX Street, and we're doing the first Friday of every month as non-farm payrolls. So I've been doing that. And I said, well, why don't I just do it every Friday at 7:30? And they're like, yeah, cool. They had to kill one of their speakers. Like, get out, Wayne's here. But now the spot's available, right? Just get in the trunk and keep your mouth shut. But anyways, I pulled some strings for you, so we'll do that over there. So on and so forth. So, yeah, let's get going. Remember, trading with leverage is not appropriate for everyone because it's risky. Your past performance does not predict future results, good or bad. So nevertheless, stay small, stay humble, focus on the long term, never risk any you cannot afford to lose. Okay? So we're going to do some technical analysis today. Just a quick look around the world. British pound, it was very strong. Now it's moderate. Euro very weak. Hey, what a shocker, right? Remember yesterday, the only thing that was strong was euro? Like, hey, set that up for short at resistance, huh? So now it's super weak. Swissy weak. Japanese yen strong. Wah, wah, wah. And that's probably part of that repatriation we talked about. And I don't know if it's only going to be a few weeks or a few months. I'm thinking only a few weeks this year versus last year. But nonetheless, Japanese yen strong. It's unfortunate. I'd rather it be weak than strong, but it's strong, and that's that. But you could have bought it at 1950, right? Jam your stop, take a walk. By the way, if you're looking at monthly pivot points, most of these currencies are kicking off monthly pivot points. I don't know about that. US dollar very strong, Aussie dollar very strong, Canadian dollar very strong, Kiwi dollar very strong. So thumbs up for the commodities, thumbs up for the reserve currency. Yen strong, huge bond market, right? Pound strong, fairly decent bond market. So basically just the Eurozone is weak. Do you want to cover some news very quickly? Well, one piece of news is NASDAQ broke through the all-time high finally. Do you remember that whole .com bomb thing? I do. I was running a company, and virtually overnight, like I swear to you, within 6 weeks, all my customers stopped paying me. Suddenly, I couldn't pay my bills. So I let the employees go. I let them take computers home. I had like 27 desks and almost 100 office chairs and computers and fax machines. And so I called up some charities and I gave them all away for free and locked the front door, slid the keys under the door, and walked away nearly bankrupt. Well, virtually bankrupt. Yeah, I remember that .com thing, but but you know what? I was in the Inc. magazine's hot startup issue of 1999. Whoa, that's all before Forex. But anyways, yeah, I remember that .com bomb. Boy, was that an ugly period. Woo-hoo! Wow, talk about searching your soul. And now we're all back, and I guess it never happened. So, hoo-ha! Guess it never happened. No, I still kind of feel like it happened. But anyways, that's, I think, interesting because we got all the other stock indices, back. Just pretty interesting. We know the key piece of news that happened in the last 24 hours since we met yesterday was the Reserve Bank of Australia. Now, remember, yesterday we discussed that Governor Stevens and the team have been talking down the Australian dollar from basically 97 is when they first started talking it down 2 years ago. And they last said it was worth 75, and it came all the way down to 76, right? Which is close enough. And so we got the Kiwi dollar down there, and then it's been paused for about a month, just moving sideways. And we've learned over the last few RBA discussions and speeches and so forth that they're very concerned about producing a real estate bubble. As they lower interest rates, it encourages borrowing, but people want to put their money in real assets, like real estate, and you can create a big housing bubble, right? Growth slow, jobs slow, inflation falling, but housing prices going through the roof because it's the only thing to do with your money. As the ASX falls out, you cash out of the stock market, go to cash, and then you're like, I don't like sitting on cash when I'm earning hardly anything on it, so move it over to real estate, right? Especially when you can borrow cheap. Why not? So that creates a bubble, and they're very concerned about that. So long story short, we talked about that yesterday. Then we've had the RBA meeting, and guess what? They didn't cut interest rates further. They certainly could have. The market was ready for it. But it shows that there is a concern. Plus, they're still talking bearish. They're still talking dovish. They're like, it's, economy is weak, right? Currency is overvalued, but we're not going to do anything about it now. So I think that's interesting. We saw that on the radar, and now it's come to fruition. So that surprised the market somewhat, and I guess I can show you an Aussie. And the Aussie appreciated. Cool. All you had to do, obviously, is have the ending going in and be ready for it. Now, would you front run that? Probably not, but if you were there, you could have traded it. Okay, there's the result. Does it look tradable to you? You take the, let's take the actual news candle. Do you guys know how to scalp the news? Let's do the 10-second version of how to scalp the news. I'll even do it on a 5-minute chart if it'll let me. I don't know if I can get that on the chart. Okay, news comes out, and you get a reaction, don't you? Here's the candle. There's the top of the 5-minute candle. And what you do is you pull out a Fibonacci. Let's see if I can zoom in one more for you. And then I got to turn that off. Hang on. Okay, this is how I trade any high volatility news event. It's an event-driven strategy with high volatility. Okay, so non-farm payrolls, for example. ADP tomorrow, same concept. Any high volatility, right, event. So the news comes out, clearly the market takes us north. And then what does it do? It comes back somewhere between the 382 and 618 Fibonacci retracement. You go long in the direction of the of the response to the new information. Okay? See, remember, this market is very efficient. And as soon as people realize they're on the wrong side of the trade, they get out. This could just be getting out of shorts. It may not be anybody going long, except scalpers. But compared to a $1 billion fund, $100 billion fund, scalpers are just helping with the liquidity part, which is fine. So anyways, so you get this big move, drop back right into here. I'm talking about this first one. I don't have my drawing tool out, but help me, Wayne. Okay, I'm talking about this one. Up, down, up. Okay? Then what? Then the next fractal occurs. And so the first one happens and you get basically a 382. What? And then the second one occurs 10 minutes or 20 minutes later, and you get a 618. The only thing that changed is the time frame. So you have, like, let's say scalpers on a 5-minute, and then maybe someone on a 5-minute doing the same thing. Up, huge retracement, long and gone. And then, now you look at it on an hourly chart, what's happened now? The same thing. It's called fractal geometry. So the 5-minute traders got a 5-minute scalp, right? 15-minute traders got a 15-minute scalp, if you will, pullback, if you will. And the hourly traders have now got their hourly pullback. And everybody's doing the same thing for the same reason, just on different time frames. Fractal geometry, my dear Watson. Elementary. Interesting, huh? That's the most fascinating thing about trading that I find, is the fractal geometry of it. Okay. So do you see, like, on the you see this on the zigzag? People are doing that. Okay. The other thing with the zigzag, just since I know you can't see the candles, but that's how a lot of people use it. They're just looking at the zigzag. They're just kind of looking at, right? But anyways, they're also looking at that. Can you see the price action involved there? Double bottom, higher high, higher low. Right? That's probably an Elliott wave technician trading. Marcia says, the market needs 6 months for interest rates to get that impact. Well, it depends on how you define market, right? The financial market or the real economy are two different things, right? So anyways, so let's move on, but that's what happened on the Aussie. Okay, German retail sales, pretty good. Now that's interesting. What's happening with the market sentiment? Good numbers out of Europe, what happened? Did the euro gain strength? Don't click that button. Don't. Dang it. All right, so I'll have to reset my charts. Great. All right, so anyways, so good German news. What happened? Euro gets strong? We're saved? Yay, no need for quantitative easing. Sell it high for all to see. Have you guys actually taken out a piece of paper, pulled out a stinky felt tip marker pen, real thick one, and write down, sell euro and post it on your wall? If you can't do something like that, then you generally don't have a strategy. Even if you're a scalper, you should be able to do that. Imagine you're trading, if you could walk around the house, let's say you trade at home, you walk around the house, and in almost every room, you have a handwritten sign taped to the wall that says sell euro. then you go to the next room, sell euro. Then maybe you're sitting in the bathroom and it says sell euro now or sell euro later, right? And you just walk around, that's it. I was talking to a trader yesterday that have been mentoring for about several months, anyways, and he's found enough success where he's trying to learn now how to build on it. And I said, well, really, what you need to do is trade like a manager, like a fund manager, and you don't just like trade where fund managers don't sit down and trade long today, trade short tomorrow, spot trade, scalping, 20 pips here, 40 pips there. No, they sit down with their investors and say, well, over the next 18 months, we plan on selling euro. And all they do is make a small trade selling euro and sell another one and then sell another one and sell another one and sell another one and another. And at some point, you could have, 45 small trades, all short euro. It could be all on the dollar, it could be on other currencies. Right? Stops but break even on every individual trade. And you can say, well, now we have a position in our portfolio where we're dramatically net short euro, but hold no risk. And he's like, he's been traveling and stuff, and he thought, that's the way to do it. Right. So if you have this mindset where based on, and this is where fundamentals come in central banking policy and stuff, you could have this mantra of you walk around the house like, if I'm not going to sell euro today, I'm going to sell euro tomorrow. And then this kind of stuff gets fairly easy, 50% retracement, yada, yada, yada. Okay, now the other thing I wanted to talk about here is that this is the Eurozone got good news. Good German news, and the euro appreciate, then what's going to make the euro appreciate, right? Nah, this is a one-way train, my friend. If you don't like it, get off at the next stop, right? So I think that's interesting. I think that's very interesting. The euro could have got strong today. It had it had all the potential in the world to get stronger, and it didn't. Swiss GDP, which is correlated, right? The Swissie's correlated with the euro. It was good too. Swissie's weak. Okay. How good was German retail sales, you ask? Well, they expected 0.4 and got almost 3%. You're like, well, that's a one-off monthly thing, right? That's just month over month, Wayne. You could have all kinds of volatility. All right, year over year, they expected 3.0 and got 5.3. I mean, OMG. Spanish unemployment improved. Now, that's the funny thing. It's such a European thing. They don't count employment. They count unemployment. So it always confuses me because I don't think like in double negative. I'm an entrepreneurial capitalist. I don't, so like, they got negative 13, but that was good because that's negative. That's a negative unemployment. Oh, I don't know. So anyways, they much better than expected. I just still, yeah. But I guess if you're a socialist pig dog, you only look at the negative side of things, right? If you're a capitalist pig dog, you only look at the positive side. Okay. UK construction PMI, good number. Yeah, we knew that. That was easy. PMI out of the Eurozone, negative, not a surprise. That's not good, obviously. And then I want to talk about just two more things, and then we'll just go right into more technicals. Where's my notes here? Let's see. Spanish government advisor Nadal says Greece is going to need a third bailout. Not a shocker. Russian energy minister Novak, gas talks in Brussels were difficult. Yeah, no kidding. Chinese vice finance minister Zhu, domestic deflationary pressure not as great as Europe. Reiterates proactive fiscal policy. Proactive? They just cut the RRR and cut interest rates. And they're like, yeah, it's not a big deal. We're not as bad as Europe. Well, if it's not a big deal, then why are you, I mean, dramatically, within 36 hours of each other, cutting the RRR and cutting interest rates, that's dramatic, dude. Don't talk it down. People's Bank of China deputy governor, Gang, says the CNY, the RMB, or the yuan, whatever you want to call it, is basically stable and within a reasonable range. Will not see large deflation, depreciation pressure on yuan. Fundamentals continue to support the CNY. Yeah, sure. So China's seriously worried, right? Why are they worried? To the players, right? The vice finance minister and the deputy governor of the central bank both came out and they're like, yeah, no, everything's cool, dude. Everything's fine. Do you know how to tell if a central banker is lying? Yeah, their lips are moving. So anyways, very interesting. So did we do enough on the euro for you guys? I mean, let's just go back to what we set up like 2 weeks ago. This is where we are now. Look what's happened. We did this 2, maybe 3 weeks ago. It's nice and easy, short here or short on the pullback. Now, obviously, our turn's going to be the bottom. I would be shocked if it didn't respect that on the short term. Okay, so everything is just tickety-boo. Remember, this area up here was what we found most interesting because playing off moving averages and stuff, right? Back to the 21, and then it came down, and then it waited for the 21 to catch up, and so, did I just mess that up? I did. Oh. Right? So what does it tell us if we're riding the 21? Are we bearish and aggressive or bearish and conservative? This is never going to let me do this. There we go. Bearish and aggressive. So it should bring you confidence in the trend if we kick off 21 and drop. I mean, yeah, it took a long time, but we talked about it for a long time too. Then finally popped. It gave you 3A2 Fibonacci retracement. It's slowly moving along, but would you, in your analysis, would you say on this daily chart that we seem to be riding the 5 EMA? Yeah. And that confirms the aggressiveness too, right? That's a dynamic level of resistance. It's falling, and it's falling as fast as I can measure. I don't use a 2 EMA. That's a 5 EMA. And we're riding that fairly aggressively. We're having trouble making lower lows. I mean, we make lower lows, but but give pretty serious retracements. So we're clearly concerned about this area here. Nobody wants to get through 110 yet. Right? My worst fear, we come down here, we touch 110, then we come back to 115, then we touch 110, and we move sideways all summer. And then right when every retail trader on the planet is ready to give up, this thing goes from 115 to parity. Does it in like 6 weeks. Excuse me. And then you're like, man, I shorted that 10,000 times and it didn't fall. And then I stopped, and then I went long and it fell. All right, well, you heard it here first, folks. Okay, any requests? I can keep going. I think you probably want to talk about yen dog, right? Dog yen? Yeah, let's do yen. Okay? Look at all the pretty colors. Let me get a drawing tool out just because it's fancier. Hey, by the way, have you guys subscribed on the YouTube channel? That way, if you use YouTube, when you log in, if I do a new video, it's just there for you. It just says, hey, you should watch this. It's not a spammy thing. It just says, hey, this is on your alert list. This is on your watch list. All right, got a tool. All right, so let's take a look. This is on an hourly time frame. It's moderate. It's not long. It's not a long-term chart. It's not a short-term chart. A couple of things that piques my interest. We tested 120. Do you think that's a psychological level? Yeah. So could you possibly have been ready for that? Like you're thinking, hey man, we're going to hit 120 and people are going to take profit? It's plausible, right? Let me see if I can get it in there. I have a different monthly on. Hang on. I have so many charts I have to stand up and walk across the room to see some of them. I have the dollar yen monthly R1 120.49. Month, is that weekly or month? I can't see the numbers right on it. So where are we here? Yeah, I guess it's weekly R1. I have on this chart I have it as 110. On my other chart I have it as 120.25. All right. So anyways, on my other chart I have the weekly R1 is right here. On this chart I have it here. So interesting, right? Do you think someone's playing the pivots as well? Yeah, and the way that pivots are calculated is depending on where your broker's located and what their server time and stuff. And so my U.S. broker is got the pivot exactly, and I think that's interesting. So maybe it's hedge funds, it's U.S. hedge funds, but anyways, I think it's interesting. So that quite a coincidence, but we've got a monthly pivot and some weekly pivots. There's a lot going on here in a psychological level. Okay, we all known information, right? The other one, no, they're both live. They're both live. Right? See, I got some money in here. We have an obvious area, obviously psychological, obviously technical. And was there a market? I'd say so. And so based on that knowledge, what's the market sentiment? Check this out. Were they playing technically last week? Do you think that was a random walk last week? Seems like it's a very, 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 very technical market, doesn't it? Notice the oscillator. Okay. Fascinating, isn't it? Because you take this up and you're like, boom. As long as you're at resistance, boom. What's the first part of a setup? It's always support and resistance. I don't care what you use. Wayne, my CCI is, I don't even want to hear about it unless you're at support and resistance. Right? Oh, this is an A correction wave of a C expansion wave of a three wave, of an inverted three wave. I don't care, dude. Support or resistance. Show it to me first. And then we'll talk about the other stuff. Okay? So, you know, some pretty clear support and, in this case, resistance. Resistance reversal pivot. Okay? Here, psychological level and a weekly, depending on how you have it calculated in your time and all that kind of stuff. Clearly, the market's technical, so we know this now, right? You can have confidence that there are other market participants and they are using technical analysis. It's not a random walk, right? It's not just ebb and flow. Clearly, there's market participants using the same data and techniques as you. Isn't that should be empowering. Then a couple of things here, it went too far. Do that. Not supposed to do that. So now, if you're a bear, you have permission to set this up for a sell. Now, once it makes a lower low, and that's what I'm talking about, this is just very, very simple price action. It's made the lower low, no matter how you measure it. So once you've made a lower low after a drop-off resistance, very often this occurs after double tops and double bottoms. It's called a 1, 2, 3. Okay, in this case, we had a series of higher highs and higher lows. We hit a key psychological level, and then suddenly we get the first lower low in a very, very long time. What do you do automatically after a lower low, guys? Using price action trading techniques. And by the way, you can do this on a 5-minute chart or a 5-day chart. I don't care what your time frame is. Fib. Thank you, YJ. And YJ, what is the ideal fib zone? What's the sweet spot? $382 to 618. That would be, Now, let me ask you something, guys. Do you think this possibly had something to do with the 50% Fibonacci retracement? Okay. The other thing that you should look for is what used to be resistance over here kicks in, right? You know, you play it almost like a head and shoulders. I mean, it is a head and shoulders. I mean, that's the thing. I don't want to get into that. People get all funny about head and shoulders. But that's essentially what it is. I think, actually, you know, technically it's a crown, isn't it? If this is lower than that. But see, my mind doesn't work that way. You know, so, you know, if you read a lot of books, they'll say, oh, if this is lower than that one, and that's a different name, and you have to do that. Look, dude, it made a lower low. Sell it. I mean, why make it so complicated? That's why I know Elliott Wave works. I don't like it. I think you should learn it and do it. You know, I'm not saying anything bad about Elliott Wave. Thing is, it doesn't fit my personality. I'm an entrepreneur. I need flexibility and all that kind of stuff. But like counting waves, and if it doesn't work, oh, well, you counted your wave wrong. Well, what am I supposed to do? Is this a 3A of the 5 wave? I mean, I don't memorize rules like that. So in this case, look, we were in an uptrend and made a lower low. They're not supposed to be lower lows in an uptrend, so sell the retracement. Sell the rally. I mean, that's it. It's a 2-second strategy, right? But anyways, I find that interesting. I would rather this go up than down. right? As far as my personal bias or opinion or whatever. So the key things that I tend to look for in situations like this is key psychological levels. 19 seems to be important. Oh, it's the monthly central pivot point. That might be interesting, right? Key levels, of previous resistance could possibly be support. Looks like there's a confluence here right around 1950. So my general thought process on the short term is, wouldn't it be interesting to maybe reach this at 1950 or 19? Okay, now I could just take a walk now and just say, if it comes down there, at least I can look for reversal patterns down there and maybe have an opportunity to trade. All right, so Albert says, when do you actually enter the trade? Well, you got two choices. By the way, great question. Thank you, Albert. When do you actually place the trade? So I guess that's what I'm talking about now. There's two ways. If you can enter with a limit order, right? You throw down a working order. So you could do it this way. Let's say one at just above 1950, right? You can do it that way. Okay? Now for that to work, price has to come down and it actually has to dip just below it. That would put me long, and then it would buy it automatically. Now, of course, you should probably have a stop attached to it, and I like OCOs. In fact, Bloomberg Television has me talking about OCOs. I was featured in a series about risk, and there was a couple other ones, really good topics. But anyways, the risk one I remember talking about, where I use OCOs, and we talk about that. So anyways, I prefer to have an OCO where I might have, let's say, 100, let's say 100 pip top and a 300 pip limit would be very typical. Okay, pretty wide, but I'm not watching it. It's a limit. Okay, I don't prefer to enter that way because it's a little riskier. It's kind of a bet. I bet you it'll go up there, right? Because you're not watching it. Now, the preferred method is price comes down here, and once we get into this zone near 50, what I'll do is, so I mark these up. You'll see me mark my charts up a lot with these drawing tools. Okay, I'll do something like that. And let's say price comes into that gray zone. Now I look at it on a 5-minute chart and a 15-minute chart. I already know what I want to do, right? What am I going to do if price drops into this gray zone? I look for an opportunity to buy. Moving average crossovers, oscillator crossovers, reversal patterns. Okay, I'd prefer the 15-minute Stokes to be way oversold and wanting to turn up. When I see that, then I drop into a 5-minute chart, and I look for like a 5-minute cycle, kind of like we have now, or a 5-day cross, okay? But 15 minutes oversold, and we're at the cycle level, within my little gray zone. So that's why I do it. It's like leaving notes. It's like memento, right? The guy that wakes up in the hotel and he doesn't remember where he is or who he is. So he walks around the room confused, and then he sees notes everywhere written in his handwriting, leaving him clues about what happened. And he's really confused. He's like, what are all these notes, and where am I, and who am I? I mean, I'm really confused. Walks in the bathroom to throw water on his face, and he sees tattoos all over his body with notes. Apparently, every day he has to learn that someone has murdered his wife, and every day he loses his memory. So he has to leave notes to himself, clues on who killed his wife. So every day he has to figure out who killed his wife. Over and over and over again. Every day he wakes up and he doesn't know what's going on. So I like to leave clues, like, what's going on? Look, I'm in a gray zone. 1950. Yeah, that might be interesting. Weekly pivot point. Yeah, that might be interesting. Okay, I guess I want to look at reversal patterns, right? That could be like like a 1, 2, 3, like we just outlined? Or how about a double bottom with a 1, 2, 3? You see it? That's how I do it. Okay, Albert? Yeah? Hey, anything for you, Albert? Yeah, pulling the triggers, shouldn't be the most difficult thing because you've already made the decision. This should be the easiest thing. In fact, if you're doing things right, your frustrations come from missing it. You missed the trade. You had it set up. Sometimes you have to wait 2 or 3 days. And then wait till you get into your trades. Like very often when I start working with a trader, they're tickled pink to get a 30 pip trade. Like, I got 30 pip, I'm the greatest trader in the world. And I just make the smallest tweaks. And like within a month they come back and they're like, oh man, I was devastated. I got into a good trade, it came back, I only got 100 pips, and I'm devastated. It sucks so bad. I'm like, wow, months changed. Because you just have to make it the smallest tweak and stay in your sometimes it's patience. I was talking to someone a couple of days ago, and he's like, man, I was in that CAD yen for like 3 weeks, and boom, finally hit my 300 pip limit. He's like, it went from 250 to 150 to 250 to 150 to 250, and finally 300. It was hard work. All right, so the entry is what I'm saying is the easy part, because you look at it, are you a bull or a bear, and you make those decisions based on long-term charts and global macroeconomics and central banking policy, yada, yada, yada. So you either want to buy the yen or sell the yen, buy the dollar, sell the dollar, buy the euro, sell the euro, buy the pound, sell the pound, buy the Aussie, sell the Aussie. You should know all these things. It should be elementary, and I should say why, and you can give me 3 intelligent reasons like that. Good. Now you're a bull. Then the next thing is, well, if you're a bull on USD yen, the market might not be bullish now, right? Well, who cares? Want it to be bearish if you're a bull, so you can buy it low. How could you possibly buy it low if it's going up and up and up? It's very difficult. So your job is to set the market right when it's mispriced. Look at it when it's falling and saying, what kind of buffoon is making that market go down? Oh, I guess I got to normalize this, right? So good. So then the next thing is, well, if you're going to buy it, right? Albert, if you work for me, you're a trader in my fund. I say, Albert, what's your plan on USD yen? Oh, I'm a bull. Give me 3 reasons why I'm a bull. Reason 1, reason 2, reason 3. Okay, I can see that. That sounds good. Now what's the plan? Well, I've identified 3 levels of support where I'm interested in buying. Currently, I'm looking at the weekly central point near 1950, so I have a zone there. The second one is the psychological level and the monthly central pivot point at 1900. And then lastly, but I hope we don't get there, level number 3 is blah, 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 blah. Good. Go get her done, Albert. Right? And the next thing is just you wait. And then what if it does this? You're waiting and it goes, yeah. Well, come up with a new plan. But very often, you got to wait like 8 hours. Like I look at this, and we might be going long in the Shanghai Open. That might be an Asia trade. So the hardest thing in Forex is to wait. That's why I say patience and discipline. If you have patience and discipline as a trader, the markets will reward you because they love what you're doing. If you don't believe me, many traders will have very poor results, and I just know they don't have patience and discipline. Nor are they doing the right things. They just trade, and they don't know their strengths and weaknesses. Right, here's the ultimate question too. So a trader comes to me and says, Wayne, I'm struggling so much, I just can't get consistency with my trades. Help me, Wayne, help me. And I'm like, okay, give me your trade journal. I want to review the last 100 trades you made. And then all of a sudden just silent. All I hear is crickets. Well, I don't really have a trade journal. All right, well, you suck, right? How do you know your strengths and weaknesses? Well, I don't really know my strengths and weaknesses. Well, what are you doing right now to improve? Well, I'm trying everything in the world. I'm doing nothing consistently. Like, oh, boy, no wonder you're having difficulty, right? Let's start at the Let's start from scratch. Are you a bull or a bear on the Aussie dollar, right? And you got to dumb it down. So, anyways, now Albert says, now where's your stop? Well, that's another question, and that's a good one. I'll answer it. It depends on what your strategy is. Is it a swing strategy? Is it a carry? Right? Are you building a position and pyramiding, or are you scalping? I mean, that dramatically changes everything, right? Would you be upset if you only got 200 pips out of that trade? Because it didn't work out as well as you thought? I mean, obviously that would be your that would be affected by your strategy, right? If you were scalping, you're like, that's unbelievable. I can't believe how lucky I got on that. So, the tactical entry is the same. I mean, if you still need it to come, you want to put a trade in the direction of your fundamental bias or your long-term technical bias. You want to buy at support, you want to sell at resistance, right? Your tactical entries on a smaller time frame, like a 15-minute or a 5-minute, it's still going to be like a moving average crossover, price action reversal, oscillator crossover, whatever your technique is, it doesn't really matter, right? So all of that's easy. So, it comes down to what is your trade worth? And this is something else I find a lot when I work with traders. I can get them more often than not. I can double their profits only because I make them not manage their trades. If you've been trading Forex for a couple of years, you're probably pretty good at technicals. You're probably pretty reasonable at fundamentals. And the only thing screwing you up is your trade management. It's not really a thing usually. Right? I'm not teaching people how to, use a MACD properly. People already know that. What's so complicated? It's trade management. And then they're like, well, I'm so afraid. I have no confidence. I'm like, well, are you measuring your results? Are you making adjustments to improve? Another way of looking at it, another person I've mentored, he's a professional golfer. He might be playing on the PGA Tour soon. If that doesn't work, he'll be a currency trader. How awesome is that, right? So we're talking, if I asked him, I said, hey, how far do you hit a 6-iron? He'll tell you, within 5 yards. That's it. So, I should be able to ask you very detailed questions about your trading, right? And by the way, I don't care about winning percentage. That's the worst indicator of success ever. That's stupid. Okay? But I should be able to ask you detailed questions about your trading. You should know it because you're analyzing. Well, first of all, you're tracking it. You're analyzing. You're making adjustments for improvement. And then you're reanalyzing it. Okay? Just like a golfer knows how far he hits a 6-iron. And then he says to his caddy, how far are we? Oh, well, we're 165. Well, you know what? I'm going to put this 8-iron back. I'm going to take the 9-iron and I'm going to punch it low. Hit it just short, let it run up. Because I'm in between clubs. In fact, what was the guy's name? Not Johnny Walker. He had a funny name like that. In I think the 80s or 70s. He would have his caddy walk the entire course, marking everything by the half yard. Half a yard! Because he's like, you know what? That's the difference between a 6-iron and 7-iron. Not 5 yards, a half a yard. But do you think he tracked this stuff? Do you think he hits the 7-iron 1,000 times over, measuring it every single time? Knows his trading, right? You should know your behavior to that reasonable detail like that as well. So like if you think this is a swing trade, fine. I like 100 to 300. I even like 150, 300. And stop managing your trades. Just be patient. Once your trade is up 100 pips, okay, now jam your stop at break even and go find another trade. Stop managing your trade. That's where most people mess up. Manage the risk. Okay, place a trade, stop, and the risk-reward ratio should be reasonable. If you're going to have a 100 pip stop, it should be worth at least 200 or 300 pips. If not, that you're just using poor stop management as a means to manage your poorly entered trade, right? If you need a 100 pip stop but you can't afford it, cut your lot size, right? You're like, Wayne, I normally have a 50 pip stop, but I really need 100. Good, put a 100 pip stop, but cut your lot size in half. Okay. Well, we've run out of time. I've over-talked another 15 minutes. I hope you're getting value out of these sessions. I'll be here for you, I guess now every trading day, Monday through Thursday here, and Fridays at FX Street. Pretty cool. So peace on earth. The world really needs to hear this. Peace on earth. May the pips be with you. May your profits be above average. Thank you to Traders Way for investing into you up front. They want you to be successful. Imagine that. I love you, man. I'll see you tomorrow. Hope so.